स्वाध्याय टीवी। डॉक्टर बाबा साहेब आंबेडकर ओपन यूनिवर्सिटी।
Namaskar. So, welcome again in the series of a lecture topic regarding the unit costing. Last session we discussed the unit costing practical problems, and under that we will discuss the first problem, that is regarding the unit costing, how the unit cost of the product can be determined and find out through the proper structure of unit costing. This time in this sessions we will discuss the unit costing practical problem number 2, which is actually little bit more advanced. In the session of that, we will compare the two different unit costs or statement of cost sheet, which was actually prepared on the basis of a certain data which was already given, and the cost sheet data has been actually identified to prepare the cost structure, and in that sessions we will actually identify the particular cost structures and cost unit of the respected year. On the basis of that, on the basis of the cost sheet, we will prepare the another cost sheet, that is the estimated cost sheet, which is called the tender cost sheet, on the basis of a unit cost sheet, and the comparative analysis between the actual data or the predetermined data for the coming period or the coming year, for giving a tenders or giving an estimation to the customers or consumers who are actually required to put an orders. So, we will move the next issue on the next problem number 2 regarding the unit cost. In that session, let us move for the particular part of the presentations, and the presentations is regarding the first concern. The problem number 2 is a firm manufactured and sold some number of calculators for the year 2013, and the summarized revenue statement for the year 2013 as follows. So, it means that the question is given in the revenue statement format, where the trading and P&L account has been given, and on the basis of the trading and profit and loss account, we will prepare a cost sheet for the year 2013. So, in the year 2013, they were manufactured a number of calculators, and on the basis of that they may be find out some estimations for the next year. So, now see the question here. The question it is actually given in the revenue statement. The revenue statement is actually mentioned in the trading and profit and loss account. The first part of the question is a trading account, where all the trading informations are given. See on the debit side that the first item is the cost of materials. The cost of materials it is rupees 1,60,000. Then the direct wages, it is 2,40,000, and another is manufacturing wages, that is 1,00,000 rupees. On the other side, the sales is given. So, that is the first part of the trading account, in which the sales is included, and the raw materials which are actually used for the manufacturing of the product. Along with that, the materials which is actually converted into a finished products, for that the direct labor has been actually put it on the same, and some factory overheads are also incurred for the same, which is also recorded in the trading account. At the end of the trading account, they find out some profit, which is actually considered as a gross profit, and gross profit has been transferred into the next, it is in a profit and loss account. See the second part of the revenue statement in the question. On the credit side, that gross profit has been transferred on the credit side, and if you see on the debit side, which you find out some other overheads. The overheads are staff salaries, the first item, that is 1,20,000, rent and rates and insurance, that is 20,000, general expenses is 40,000, selling expenses rupees 60,000. At the end we have a certain amount of profit, that is 60,000 rupees. So, in short, this is the question, and in these questions we can easily identify and discriminate the items which are actually recorded in the respected heads. So, now if you are going to see the first part of the question, that is the cost of material and direct wages, both are actually recording in the first part of the cost sheet. Then the manufacturing expenses which is actually recorded under the part of a factory expenditures. Then the staff salary, rent, rates and insurance and general expenses, these three expenses, this is second part of the question, and these expenses are recorded under the administrative overheads. Then the selling expenses which is actually recorded at the last part of the question, and selling and distribution expenses. So, in short, these things are going to record in the cost sheet in a different way. Ultimately, this all informations are given in this question. It is actually regarding the manufacturing of a 1000 calculator in the year 2013. So, the firm is manufacturing a 1000 calculator, and these are the expenditures are incurred. In short, they have a sales of rupees 8 lakh at the end of the particular part. This is the second part of the question. We will discuss the later part of the stage when we will discuss the second part of the answer. Now, we will concentrate first part of the question. This is the first part of the question, and try to find out the statement of cost sheet for the year 2013. So, let us move the answer number 1, that is the statement of cost sheet for the year ended 31st/12/2013. As we were already discussed in the question, the first part of the question is we have a direct material and direct wages. As we were already discussed in the last session, that the cost sheet is actually prepared in a 4 stages. The first is a prime cost, then the second is a work cost, then the third is the cost of production, and the fourth is a total cost. So, in this way the whole 4 part has been divided. This revenue statement also can be distributed in a 4 part. The first part on the debit side of the revenue statement, which is actually related to a prime cost information. Now, see the revenue statement, and in the revenue statement the first part of the information is direct material and direct wages. So, the direct wages and direct material which is actually recorded, the part of the first part, cost of materials, 1,60,000 rupees. Now, see here, the statement is actually prepared in this way, the particulars, amount, and the last column is per unit. We were manufactured in the year 2013 1000 units. So, the 1000 units will be actually distributed between the whole amount of manufacturing cost. Now, according to the question has been actually divided into a 4 part. From the revenue statement, the first part is direct material and direct wages, which is to be recorded in under the heading of a prime cost. They start with the first item, that is the cost of material, recorded in the amount column, that is 1,60,000 rupees. How you can identify this per unit is 160 rupees? The total amount of units are manufactured in this particular year, that is 1000. So, 1,60,000 rupees divided by 1000 units, it comes to 160 per unit. So, how much actually how much amount of cost incurred for the material per unit? That is 160 rupees. Now, see the question, that is the direct wages. Here the direct wages has been taken from the first part of the revenue statement on the debit side, that is 2,40,000 rupees. So, now 2,40,000 rupees of direct wages will be recorded in under the heading of prime cost in the amount column. Again, it is to be divided by the 1000 units, and we will find out the cost per unit, that comes to 240 rupees. Now, these are the first 2 items under the heading of prime cost. Total of this prime cost, it comes to 4 lakh rupees. 4 lakh rupees total amount, as well as the per unit cost is also comes to 400 units. So, this is your first part of the cost sheet for the year 2013. Now, second part of the cost sheet is will identify some other direct expenses if you have. We do not have other direct expenses. So, directly moves to the next part, that is the factory expenses and factory overheads. We have some factory expenditures and factory overheads which are actually given in the revenue statement. See in the first part of the revenue statement in the question, that is a manufacturing charges are given. So, manufacturing charges is rupees 1 lakh, and that is recorded in the cost sheet. Second part, added into a prime cost 1 lakh rupees in the amount column. Again, it will be divided by the number of units manufactured in the year 2013, which is actually 1000. So, 1 lakh divided by 1000 units, it comes to 100 rupees per unit. So, 1 lakh rupees in an amount column, and per unit it is 100 rupees will be added into the prime cost. It comes to 5 lakh rupees, it is a total amount, and 500 rupees, that is per unit cost. It comes to a work cost. Now, it is actually, you can say it is a factory cost as well as a work cost. This is your second part of the cost sheet. So, now till here we will identify the total amount of work cost or a factory expenses or a factory cost, which is actually a part of your first part of a revenue statement, which was actually given in the question. Now, see the question again. The first part of the question is already done. We will now move for the second part of the question, which is actually related to a profit and loss account. Now, see, on the debit side, in the second part of the question, we have 3 more expenses. The first is staff salaries, second is rent, rates and insurance, and third is general expenses. According to the explanation in the last session, if you remember that, we were already discussed that the certain amount of expenditures are incurred for the administrative. So, admin expenses are actually incurred to manage a business. These are the expenses which are actually try to manage the business and how the business will actually runs further. So, any expenditures which are actually a part of subordinates to help the selling of a product or maybe running a business smoothly will be considered under the overheads. Either maybe it is considered under the admin overheads or maybe a selling and distribution overheads. We have many expenditures on the revenue statement debit side under that particular part. The first 3 expenses are going to record under the part of admin overheads. Now, the staff salaries and rent, rates and insurance and general expenses, all these 3 expenses are recorded under the administrative expenses. Now, see here in the solution, under the heading of administrative expenses, staff salaries, that is 1,20,000 rupees, rents, rates and insurance, it is 20,000 rupees, and general expenses is rupees 40,000 rupees. All these 3 expenses are considered under the administration expenses. So, that is why it is recorded under this head. In the inner column, total of these 3 expenses are transferred into outer column, it comes to 1,80,000 rupees, and we need to find out the per unit cost also for admin expenses. So, that is why it will be divided by the number of units manufactured in the year 2013. It comes to 180 rupees because of 1000 units are manufactured in the year 2013. So, 1,80,000 rupees is the total amount and 180 rupees it is a per unit expense will be added into a work cost. Now, see the total amount of cost of production, 1,80,000 added into a work cost, that comes to 6,80,000 rupees, and per unit cost it comes to 680 rupees. This is your cost of production. Now, see the question once again. Now, if you have identified the only one item is remaining so far from the question of the revenue statement, the second item, that is selling expenses. So far as expenses are concerned, only one item is remaining, that is selling expenses. So, selling expenses is a part of selling and distribution expenses. It will be recorded under the heading of a selling and distribution expenses. Selling expenses rupees 60,000 added into a cost of production. Per unit, find out again, it will be divided by the 1000 units. So, it comes to a 60 rupees. Both will be added into a respected item and find out the cost of sales. Cost of sales, it comes to 7,40,000 rupees total amount, and per unit cost of sales it comes to 740 rupees. Now, remaining 2 items are also given in the question. If you identified, the sales is given in the revenue statement right hand side, or you can say on the credit side, by sales is rupees 8 lakh, and again the profit, net profit is also given in the question, that is given in the debit side, last item of the profit and loss account, net profit is rupees 60,000. So, we did not need to find out both these items so far as actually concern of the statement of cost sheet for the year 2013, which is clearly defined in the question itself only. 8 lakh rupees sales will be recorded after the cost of sales divided by the 1000 units. So, per unit sales price is rupees 800, and difference between the sales and cost of sales, it comes to 60,000 rupees, which is your net profit. Per unit net profit, it comes to 60 rupees. So, this is what we actually find out the statement of cost sheet for the year 2013. So, see here the question is given in the different format. Now, you see here the same question, the same informations which are actually given in the revenue format, revenue statement format, we will actually prepare the same answer, the same thing in the different format, which actually rectified and defined the cost sheet, how the cost has been determined, how the cost structure has been identified for the respected product, and to identify the cost per unit of the manufacturing of a product. So, here ultimately the answer has been reflected in a different way. The one is it will be reflected in the revenue statement, which is actually required on the basis of the certain things for the comparative analysis, and the cost sheet is prepared to understand the how much amount of cost incurred for the respected product, to control the cost or maybe to understand the cost and the cost per unit. So, the same thing, same answer, same evaluation, same data which was actually given in the revenue statement reflected in the other statement, that is the cost sheet. Now, here this is your first part of this question, the first part of the solution of this question, which is actually find out the cost sheet of the respected year 2013. Now, the second part of the question, is they asked to find out the estimated cost sheet, tender cost sheet on the basis of the previous data or the data which was actually given for the year 2013. They have a certain changes in the year 2014, maybe increasing of a direct material cost, increasing of a wages cost, maybe the changes of some overheads, either maybe increase of the increasing of overheads, or maybe the controlling or per unit cost of overheads may be reduced. So, on the basis of a certain adjustments, we need to find out the what would be the change for the year 2014 to put the estimated cost sheet for the manufacturing of a number of calculators. Maybe the number of calculators are also going to change. So, we need to identify the how many calculators are going to manufactured in the year 2014 and what would be the change according to the number of calculators has been manufactured by the manufacturer, and what would be the reflection on their cost sheet. See the question, second part of the cost sheet. Okay. Now, see the second part of the question. For the year 2014, it is estimated that we have a certain adjustments. First, we will just go through the whole second part of the question. The first is the output and sales will be of 1200 calculators. So, that means it is change. Earlier, we manufactured 1000 calculators in the year 2013. Now, for the estimation of 2014, they will manufacture 1200 calculators. For the manufacturing of 1200 calculators, there are certain changes in their expenses also. See the second adjustment, price of materials will rise by 20%. So, it means the cost of materials will increase by 20%. Third adjustment is wages rates will rise by 5%. So, the direct wages is also about to change by 5%. So, it will be increased by 5%. Manufacturing charges will increase in a proportion to the combined cost of material and wages. So, on the basis of the direct or a prime cost, the manufacturing expenses will affect. So, the total percentage of changes of a prime cost would be affected on a manufacturing overheads. We will find out how it would be affected to the manufacturing charges. The next adjustment is selling expenses per unit will remain unchanged. Listen, see here, the selling expenses per unit will remain unchanged. So, underline on the per unit. So, it would be affected, the per unit it will remain same. So, we already have a increasing to 20% of the number of units manufactured. So, it will be affected the total amount of value of selling expenses. The sixth adjustment is other expenses will remain unaffected by the rise in output. It means that other expenses, whatever the remaining expenses except the manufacturing expense and selling expenses, that means only one expense is remaining, that is admin expenses. Admin expenses will remain unaffected by the rise in output. It means it will be remain same whatever the amount was actually incurred in the year 2013. It will be remain same in the year 2014 also. So, we need to actually interpret the question properly. Fifth and sixth question, fifth and sixth adjustments both are very technically sound adjustments. Selling expenses per unit, so we need to identify per unit, and in the sixth is other expenses will remain unaffected. So, the unaffected word is actually very much important. So, in this way we need to prepare the estimated cost sheet for the year 2014. Prepare a statement showing the price at which the calculator to be manufactured in the year 2013 should be marked so as to show a profit of 10% on selling price. So, here the profit would be charged on selling price, rather it would be charged on a cost price. So, always whenever you actually prepare the statement of cost sheet, it would be actually reflected on your cost price. So, when you prepare the cost sheet, you will actually have a cost of sales, that is your cost. You would never get a sales before the profit has been identified. So, how it would be charged the profit on selling price, that also we will need to identify. Now, see the answer, how it would be, find out the solution. So, the answer, our second part of this answer is estimated cost sheet for the year 2014, into bracket output is 1200 units. Output is 1200 units. Earlier we prepared a cost sheet for 1000 units. Now we are preparing an estimated cost sheet for 1200 units. Now see cost of materials. cost of materials is rupees 160. Now see the first cost sheet. Here the cost of materials per unit is 160. See here the cost of material per unit rupees 160, and now the cost of material is rupees 160 plus 20% increase. How the 20% increase? Because of the adjustment is very clearly mentioned, the price of material will rise by 20%. So it would be affected here, the 20% increase. 20% plus of 160, it comes to 32 rupees per unit. So the total amount of cost of material in the year 2014, it comes to 192 rupees. 192 rupees per unit cost will be multiplied by 1200 units, because of in the year 2014 number of calculators manufactured is 1200 units. So 192 multiplied by 1200, which comes to 2,30,400 rupees. Now this is a change. This is the way to find out the cost of materials. See here, very simple way. First of all, we need to identify the how much amount of cost of material were incurred in the year 2013 per unit, that is 160 rupees. Now what would be the change of cost of material in the year 2014? They mention in the adjustment it would be increased by 20%. So we add 20% of 160, it is 32 rupees added into 160. So now the per unit cost of material would be 192 rupees. And now the total amount of cost of material, how it would be find out? It would be multiplied by 1200 units into 192 rupees per unit, comes to 2,30,400 rupees. So the cost of material cost is 2,30,400 rupees for estimated cost sheet of 2014. Now second item, wages. Wages in the year 2013, it is 240 rupees. Now see this earlier cost sheet, direct wages per unit cost is 240 rupees. Now what is an adjustment regarding the wages? Wage rates will rise by 5%. Now just see the estimated cost sheet. Wages in the year 2013 was 240 rupees per unit, and it is increased by 5%. So 5% applied on 240 rupees comes to 12 rupees. Added into a wages, now the new wages per unit cost for the year 2014 comes to 252 rupees. Again multiply by the number of outputs units in the year 2014, that is 1200, multiply with the 252 comes to 3,02,400 rupees. So this is the way to find out the wages. Okay, so now direct wages, it actually comes to 252 with the changes of the whatever changes affected in the year 2014, 5% increase change in the 2013, and per unit cost will be multiplied by the number of outputs. So this, the total of the direct materials and direct wages, it comes to a prime cost for the estimated cost sheet of 2014. See the answer, the total amount of prime cost is 444 rupees per unit, and the total amount of prime cost is 5,32,800 rupees. So this is the this is your prime cost. Now adjustment number 4, which is very important, and how it would be affected to calculation of a manufacturing overheads. Because of the manufacturing overheads, it's calculated calculated on the basis of a combined cost of material and wages, or you can say on the basis of a prime cost. Now see the prime cost of the year 2013 and prime cost of the year 2014, and on the basis of the comparison between the 2013 and 14, whatever the changes are occurred in the year 2013 and 2014, the same change would be affected of the manufacturing expenses in the year 2014 also. See the answer. Now here I'll show you how it would be affected here. See the working number 1. Manufacturing overheads. Combined cost of material and wages in the year 2013 was rupees 400. I'll show you how it was 400 rupees. Now see here the prime cost rupees 400 per unit added of the cost of materials and direct wages on the per unit column, right. Now see the estimated cost sheet. In the estimated cost sheet, after the changes are occurred, cost of material and wages added, the prime cost per unit is rupees 444 rupees. So these two items are very important for the calculation of a manufacturing overheads in the year 2014. Now see the working. Here the combined cost of material and wages in 2013 was rupees 400, whereas in the year 2014 it will be a rupees 414. Now these two items are very much important for the calculation of manufacturing charges. See the question, and question number 4, manufacturing charges will increase in proportion to the combined cost of material and wages. Combined cost of material and wages, it means the total cost of material and wages, and the proportion which is actually increased in the year 2014 as compared to the year 2013. So, we just find out the proportion of changes in 2014 compared to 2013. See here, in the year 2014 it was 440, it will be 444 rupees, which was actually earlier 400 rupees. So, it means that it is increased by 44. It is increased by 44, it comes to a change of 11%. This year it is 444, the last year it was 400. So, the change of 44, it's actually find out the change of certain amount, that this change was actually incurred here, the whatever amount will be reflected in the manufacturing overheads. The changes were 11%. So, now see the manufacturing overheads in a factory last year in the year 2013. Just see here, the manufacturing overheads in the last year 2013 was rupees 100, per unit cost was 100 rupees, and now according to the changes we find out in the working, it will be increased by 11%, added 11% into the manufacturing overheads on 100 rupees, which comes to 11 rupees, added into the manufacturing overheads. The total amount of manufacturing overheads in the year 2014, it comes to 111 rupees, added into the prime cost, and the total amount of the manufacturing overheads multiplied by 1200 units to the 111 rupees, which comes to 1,32,200 rupees. The total amount, it comes to 555 rupees per unit, and amount 6,66,000 rupees, which is actually a work cost. Now, this is a second part of your unit costing, estimated cost, its work cost. Now, moving to the next part, that is admin expenses. See here the question, admin expenses adjustment is number 6. Other expenses will remain unaffected by the rise in output. It means that there would be no change in any amount of expenses per unit. So, whatever the per unit expenses, whatever the expenditures are incurred in the year 2013 under the head of admin expenses, the same amount will be reflected in the estimated cost sheet in the year 2014 also. Now, see, in the 2013, the admin expenses was actually incurred 1,80,000 rupees, which includes staff salary, rent rates and general expenses, and it is unaffected. It means that the whatever the expenditures were incurred in the 2013, the same amount of expenditures will be reflected in the year 2014 also. Now, see here, after the work cost, add administrative expenses into bracket same per unit. Same per unit, the total amount was actually remains same. The staff salary was 1,20,000, rent was 20,000, general expenses rupees 40,000. The total amount is 1,80,000 rupees. The whatever the expenses were incurred in the year 2013, the same expenditures are incurred in the 2014 also. So, we are writing 1,80,000 rupees in the amount column. Now, what would be the change? It would be affected per unit cost. Why? Because of the total amount of admin expenses is remain same, but number of units manufactured as compared to 2013 is changed. In 2013 we manufactured 1000 units, and now in the year 2014 we are manufacturing at 1200 units. So, the total amount of admin expenses, if it is unchanged and unaffected, it would be remain same, then the per unit cost would be changed, because of in year 2014 we increase the manufacturing units by 20%. So, 1,80,000 divided by, instead of 1000 units, it will be divided by 1200 units. So, it would be reflected per unit cost in estimated cost sheet, and it would be reduced. Per unit cost would be reduced, and it is affected 150 rupees. Now, see here, admin expenses per unit is 150 rupees per unit. This is 150 rupees per unit cost. If you see the previous cost sheet, the per unit cost was 180 rupees. See here, admin expenses per unit was 180 rupees per unit. So, this is a change because of this adjustment. Per unit cost is reduced because of the total amount of admin expenses remains same. Now, moving to the next part, after added the admin expenses, we have a cost of production, that is 705 rupees per unit, and 8,46,000 rupees the total amount. The last part of this question is the selling expenses, and selling expenses we have an adjustment. Adjustment number 5 is selling expenses per unit will remain unchanged. Here we need to point out per unit will remain unchanged. It means that the selling expenses per unit remains same. Now, see how it would be actually reflect on the cost sheet. Selling expenses per unit last time was 60 rupees. See here, selling expenses in the year 2013 per unit is rupees 60. Now it is, if it is unchanged, that means the same amount of selling expenses per unit will be reflected in the year 2014 also. So we have to write here the 60 rupees selling expenses per unit in the estimated cost sheet. Then how it would be changed? It would be changed in amount. Why? Because of we are actually manufacturing more units than the 2013. So amount will be, find out 60 rupees per unit selling expenses multiplied by 1200 units comes to 72,000 rupees of a total cost, and would be added into the cost of sales, and this is your cost of sales, which is 765 rupees per unit, and 9,18,000 rupees, it is your total amount. And now moving to the last adjustment, that is we need to find out the selling price to add a profit of 10% on selling price. See, if we don't selling price we don't have, because of we have a cost of sales here. We have a cost of sales 765 rupees and 9,18,000 rupees. So we don't have a selling price to add a 10% profit. Then how we will calculate the profit? We have a formula that if the profit would be charged 10% on selling price, then you can charge a profit 1/9 share on a cost price. So that means the whatever the cost price we have, instead of 10% profit will charge on selling price, if you calculate 1/9 share on cost, the same amount would be reflect on your profitability. So see here, the cost of sales per unit of estimated cost sheet is 765 rupees. This is your cost of sales. Now as the formula we designed, if the 10% on selling price, then 1/9 share of cost price, so 765 multiplied by 1/9 share, which comes to 85 rupees profit. So now 85 rupees, it is your profit, would be added in cost of sales. So the next point is net profit, 10% on selling price or a 1/9 share of cost price, which comes to 85 rupees per unit, and multiply by 1200 units comes to 1,02,000 rupees profit, added into the cost of sales, which comes to your sales 850 rupees and 10,20,000 rupees. Now you applied the same formula. How much percent profit they told you to charge on sales price? 10%. What is your sales price? Your sales price is 850 rupees. Charge 10% profit on 850, it comes to 85. So your your answer is also tallied on the basis of calculations. 850 your sales price, 10% of profit, which comes to 85. So this is a formula where you can calculate it. If they offer you a percentage of profit on sales, and if you have a cost price, it would be calculated on a certain formula. So the formula is 10% on selling price, we calculated 1/9 share on a cost price, and the profit, which is actually calculated in this way. So this is the way we can find out the estimated cost sheet. So in this way we determined the cost sheet on the basis of a data which was given in the question, and the certain adjustments to change the cost sheet for the coming years, to prepare an estimated cost sheet, to put some orders, to ask some consumers to give us some orders, to prepare a tender cost sheet or an estimated cost sheet for the future progress and future plan, to identify the what would be the cost price in a future estimation of your product. This is what the way to find out the solution of a problem number 2. Thank you.
स्वाध्याय टीवी